Hello, good evening, ladies and gentlemen. Welcome and thank you for joining us on our UK Property Masterclass today. We'll look into how to invest in the UK property from just down payment of Singapore dollar 60,000 and to achieve 6% rental yield. I'm Lucas Chong, Business Development Manager for Southeast Asia from Select Property Group.
And I'm Janet Chai, Property Consultant for Southeast Asia and from Select Property Group.
And looking at the agenda today, we'll start with the introduction to Select Property Group for those who are new to us. And we'll look into the introduction to the UK market, as well as to highlight the hotspots for investment for those who are exploring to invest in the UK in year 2022. And we'll dive deeper into Birmingham as a city, and also looking into the track record of Affinity Living branded residences. And of course, we'll look into the exclusive opportunity for our latest development, Affinity Living Lancaster Wharf in central Birmingham.
So without further ado, as an introduction to Select Property Group, I believe some of us here who are the past buyer are familiar with who we are and the services that we provide. To those that are new to us, we are UK's leading property developer, and we specialize in developing different asset classes in their best emerging market so that we can achieve the best optimum rental return for our clients worldwide. Something worth to mention is we are different from traditional developer. So apart from building our properties, we also sell the property, and most importantly, we help to manage the property on your behalf. We also have an internal resale department who can help you to resell your property if you wish to exit in the future. We have been doing that for the past 18 years for our clients internationally ranging from Asia to Middle East to the UK. We are headquartered in Manchester with global offices in Dubai, Hong Kong, Shanghai, and Malaysia, as we want to be close to our international clients worldwide. Lucas and I are based in the Malaysian office. We look after the Southeast Asian market, primarily the Malaysia and the Singapore. Just an overview of our track record. So we have over 400 employees globally, and over 13,000 properties delivered or in the pipeline. In terms of rental income, we have generated approximately £1.8 million to our investors worldwide, and we have just about £2.1 billion of asset under our portfolio. And going into our investment brand, we always believe in branding when it comes to property investment, and that is why we build our assets around our brand. So we have 4 main branding for our different asset classes. Vita Student is our purpose-built student accommodation. City Suites is our service hotel apartment. Affinity Living and Crown Street is our buy-to-let property, residential property. Just to touch on a bit more on each branding, Vita Student is where we started within the company. Currently we have 25 Vita development across the UK, and this is a very successful track record for us. So each Vita student accommodation is located in the city centre of each city within 5 to 7 minutes walk to a main university under the Russell Group University.
Yes, indeed. And I think for those who are aware, Maple Tree investment firm in Singapore has actually acquired some of our Vita student at £165 million just in 2021. And in fact, Deutsche Bank, their asset management wing, DWS, has acquired about £600 million worth of Vita student as well to add into their portfolio. So more to say about our track record and success of this branding.
That's correct, Lucas. So all our Vita students are streamlined. They have very similar specification and services. That is what built the brand recognition. And moving on to City Suite, our first City Suite is completed in 2017, and it's located in the prime city center location, right next to the 5-star Lowry Hotel. And following the success of City Suites 2, City Suites 1, City Suites 2 is recently opened last year. So it is about 2 minutes walk to the shopping district, Harvey Nichols and Selfridges. Crown Street is our buy-to-let residential. For those who are familiar with Elizabeth Tower and Victoria Residence, these were completed and rented very well. The Blake is currently sold out, whilst 360 is in the last phase of our last final phase of sales. Affinity Living, we will go into further details in Affinity Living in our webinar later.
Yes, thank you, Janet. And looking into the UK property, I believe, whether you're a new investor exploring or a seasoned buyer, let's go back to the basics of UK property. Why UK property if you're looking to invest outside of your home country? UK being the top choice for international buyers, primarily because it's a very mature, stable, and proven market. In terms of property, in the UK, it has always been of high national importance to the country, as the property has a very direct and huge impact on national wealth. So that's why the UK government has always had a good priority on the property market, making it a very stable investment. And of course, looking at in terms of growth as well, track record of stability and strength, I think UK probably is one of the most successful market for property growth in the past 20 years, 2 decades from 1996 to 2021. We see an average property prices in UK growing by 160%. And of course, more importantly, when we invest outside of our home country, the legal framework is always something very vital, as you want your framework to be protective of both sellers and buyer side. And the UK legal framework has, again, always proven to be very stable and fair to both buyers and sellers, making it a very safe investment. And without further ado, let's dive into the UK market. Let's take a look on the UK property market performance, as well as the forecast for the next 5 years. And this will be a report by Surveillance for forecast of house prices for the next 5 years by region. And as we can see, one of the top performing region would be West Midlands, and that would be where Birmingham is located at 24% forecasted for the next 5 years. And to give an idea for UK national average, it is at 21.1%. And we can see that London, depending on the zoning, as we can appreciate, it is more of a maturing market. It is at 12.6% for the next 5 years. So depending on your purpose for buying in the UK, whether it's for investment or self-use, if the element for investment is more important, we want to look or enter into the city where we forecast to have the highest growth in the next 5 or 10 years' time. This would be another very recent report by Zoopla. Zoopla is very similar to Property Guru in Singapore. It's a platform for property selling and renting. This report is as of June 2022, also looking at the growth of property price index by region. In fact, if you can look into the West Midlands, it is topping it at 9.1%. And another statistic for the national statistic on UK house price index as well, we do see that London remains the region with the lowest annual house price growth. It is a very stable rental market, but in terms of growth, it could have been more mature now. Looking at the different region, West Midlands is again one of the top growing region in this case as well. I believe when it comes to investment, it's always about entering at the right time when the property cycle is going up, and also exiting at the peak, of course, for capital growth. And many of us would be wondering, why the northern cities or why West Midlands is growing so rapidly compared to other regions. It really drives down to this master plan called the Northern Powerhouse. Now, Northern Powerhouse is a wider master plan announced by the UK government Prime Minister in 2015. And the main objective is to divert the UK economy from London to northern cities. And Birmingham or even Manchester, these are firmly identified as the core cities for this master plan. So apart from property, we do see support and fundings being put into various sectors in the northern cities in terms of transport, research, healthcare, to boost the economy up north. And these are why the northern cities has been consistently the top growing cities for the past few years and forecasted to be the best performing cities in the future as well. And without further ado, let's take a look into this brief video. For those who are new to Birmingham, if you're not too familiar with Birmingham, this will be a good overview as what the city is like. Please enjoy.
Thank you for sharing the video, Lucas. So I heard Birmingham is a hotspot. What makes Birmingham such a strong investment hotspot?
Very good question. I think for Birmingham as well, for those who are not familiar, it is located in the West Midlands, and from the video we can see very useful data on why Birmingham has been the fastest growing city. In terms of population, we are looking at a whopping 2.8 million, and this is just in the metropolitan district of Birmingham. Distance from London is fairly near as well. It's about 128 miles. So currently, if we take a train from London to Birmingham, it takes about 1 hour and 24 minutes approximately. And once the high-speed 2 completes, that will reduce the travel time even more by half at just about 49 minutes. And in terms of economic output of the city, we are looking at a 31.9 billion pounds, which is the largest city economy in the UK outside of London. And that is why Birmingham is often known as the second city outside of London in the UK. And I think more importantly, if we were to go to Birmingham, you would realize that most of the population in city center, they are very young crowd, very young tenant. It's a very young and rising population in central Birmingham, which is good for the rental market. Birmingham is the second most popular city in the UK, where we've seen an 165% increase, in fact, in the population from 2002 to 2015. So that's a huge increase there. Essentially, Birmingham's population growth is 3 times higher than UK national average, which is why demand couldn't keep up with the supply at the moment. And population growth is expected to be strong in Birmingham, with extra 50,000 more people to be living in the city just by next year, 2023. Birmingham was also the most popular city destination for those migrating from London in 2018, followed by Manchester and Leeds. In Hong Kong as well, for those who are aware, with BNO passport being welcome to the UK, a lot of Hong Kongers are actually moving to both Birmingham, Manchester, and London.
Very impressive data there, Lucas. So I've always known Birmingham as a financial hub. What is there to offer other than that?
Yeah. I think for Janet, it could be a financial hub. For me, I've always known Birmingham as more of a education city, because we do see many universities, both in Singapore and Malaysia, having bridging programs to Birmingham, for example. It's definitely one of the world's education center, apart from being a financial hub. We are looking at 5 world-class universities in Birmingham with over 80,000 university students, and it is the second largest center of higher education in the UK. And worth to mention, over 67,000 graduates actually chose to stay and work in Birmingham after they graduate. So that also contributes to the population growth in the city. And to bring through these are the 5 main universities in Birmingham. University of Birmingham to start with. We do have Aston University, Birmingham City University, University College Birmingham, and Newman University as well. And just to have a sneak peek, Aston University and Birmingham City University are actually located close by to our side of Affinity Living Lancaster Wharf, making it very accessible to both the students' tenant pool as well as the young professionals that we are focusing on. And more relevantly, I would say, following the Northern Powerhouse Master Plan, one of the measures taken by the UK government is to incentivize, FTSE 100 companies to either move their headquarters or their operating branch to Birmingham. And these are some of the big names that's present in Birmingham. We've got HSBC moving their headquarters to Birmingham in 2018. Deutsche Bank, Barclays, PricewaterhouseCoopers are some of the companies that's present in Birmingham. And I think just to mention recently as well, Goldman Sachs have also opened their headquarters in Birmingham. In fact, it is in Como Road, which is the main central business district, similar to Shenton Way in Singapore. And that's only 7 minutes walking distance to our site of Affinity Living Lancaster Wharf. And as you can imagine, with all these companies moving over, it creates job opportunities. They are hiring worldwide. and that increases the rental demand in the city as well, apart from the economy. And let's also take a look into Birmingham, the master plan itself within the city, zooming into the master plan, starting with the big city plan. In fact, we do have a few master plans in the city itself. The big city plan is a wider master plan for the Birmingham by the council. So it's a 20-year plan with more than £1 billion in budget. Now, the big city plan covers a few areas in central Birmingham, from the west side, the New Street Station, Snow Hill Station, east side, and Southern Gateway. But essentially, the British government would want this to become the world's top 20 super cities by 2030, and also to create a very well-connected and efficient city center within walking distance. Birmingham itself is already very accessible by tram and train, but definitely this is an area that the UK are focusing on as well. And by 2030, the scope of the city center will expand 10 times, basically increasing the new public spaces and also increasing the new office spaces. So as you can imagine, all this contributes to the economy of the city as well as the property price. Another master plan worth to mention would be the Midland Engine. Now, this Midland Engine is a 25-year national economic development project proposed by Prime Minister David Cameron, and it is to promote more of trade, transportation, innovation, financing, and housing. So with this master plan, 300,000 new jobs are expected to be created by year 2030. And the high-speed 2 is also coming from the Midland Engine in terms of transportation. So this will start from London and stopping by Birmingham first before going to Leeds and ending in Manchester. The plan covers more than 10 million people and is a specially put forward strategic plan on how to cooperate with China. And just a fun fact for those who aren't aware, Birmingham and China has actually quite a good influence and impact on each other in terms of culture, building as well, and students coming over. So great support there. And going deeper into the Midlands World Gateway project, it is estimated that more than £500 million will be invested in the expansion of Birmingham Airport alone. Yeah, so as you can imagine, with airport expansion, that creates more direct flights from other countries going into Birmingham. Again, connectivity as well as making it more populous. And for those who are aware, recently the Commonwealth Games in Birmingham has quite a good impact on the city as well. Whenever there's a Commonwealth Game, we always see a growth and value added to the city. And going back to the airport, estimated 34,000 new jobs be created from this alone, and airports can bring in 42% economic growth to the Midlands in general. So those will be the macro of Birmingham as a city. And I think more relevantly, we want to look at high speed 2, which most of us, I believe, are aware. So these actually starts from London, going up north as part of the measures of the master plan, going through Birmingham first, which is confirmed, and then going through the northern cities, ending in Manchester. So as we mentioned, the first phase is due to complete in 2026 to 29, and that will reduce the travel time to 49 minutes from the original 1 hour and 24 minutes. So that increases the connectivity between both cities. Again, more people moving or traveling to Birmingham. Yes, and this third master plan is something that, personally, I do like, because it is a very specific master plan focusing on the Snow Hill district. The Snow Hill district is the central business district of Birmingham. So this is where Como Road is at, where Goldman Sachs' new office, HSBC, is at. And this is only 7 minutes away from our site. Como Road is home to some of Birmingham's most valuable assets. It's a hugely important area with great potential, and it is to enhance the area's key asset and drive Birmingham growth and regeneration activity. So the proposal itself is for 20 years plan, including a £50 million investment from this master plan. And also to share with everyone some of the news articles, some highlights there, of 600 million pounds Snow Hill master plan to transform Birmingham business district. Also, some of the plans were to increase office spaces. 5 million are being put to the Snow Hill train station alone, and also to increase public spaces within the Snow Hill district. And Goldman Sachs to open office in Birmingham, UK. So currently they are also hiring worldwide for their headquarters in Birmingham. So this will be our main tenant pool as well, being very close to the Comoro. Also, in terms of new HSBC headquarters, this is in 2018. And of course, given all these circumstances and data, it is actually a record year for residential land and investment transactions for Birmingham last year and the year before, which signals a boom for the Birmingham market property-wise. And as a summary, on why invest in Birmingham, if you're exploring different parts of UK, I would suggest to consider Birmingham because fundamentally, as we all know, properties are all about demand and supply. And Birmingham has always had a huge undersupply of property. It is currently catching up now, but for the next 5 to 10 years, we're looking at a good forecast. So between 2002 and 2015, as we mentioned earlier, huge increase in population growth, and that impacts directly on the rental demand, property rental demand in the city. Approximately 10,000 new people will fly into Birmingham every year. And I think something to take note, to highlight as well, is that based on statistic data, Birmingham would still need to add about 2,500 new homes each year just to keep up with the growing demand there. And looking at the long-term imbalance between supply and demand, it is also always wise to enter at early phases when demand is still keeping up with supply. The land available for development in Birmingham is quite scarce and getting more expensive now. So average development land price has risen from £12,000 to £15,000 per unit between 2013 to 2018. And a number of development projects decreases year by year. It will, further aggravate the shortage of residential rentals in city centre. And if we dive into the Birmingham rental market as well, some facts to share with everyone. Birmingham has been home to the largest increase in rental demand from recently Q4 2020 to Q1 2021 with a 25.2% rise in demand. And during the first quarter of the year, 46.7% of properties on the rental market are being snapped up by tenants. So rental do move very quickly, especially in central Birmingham. And in terms of rental rate, we've seen an increase by 15.1% in the past year alone in terms of year-to-year rental growth. Very impressive growth there in the city.
Right. So I will now take you through our fifth Affinity Living development, Affinity Living Lancaster Wharf. Going into the brand of Affinity Living and our track record. So Affinity Living Lancaster Wharf is specially designed to cater to the rental market. So we look at the tenants' dynamic, as in what do they prefer and what drives them to live on, and what amenities do they like, and then we design our building in accordance with that. So since then, we have completed 4 Affinity Living residences in Manchester, and Affinity Living Lancaster Wharf will be our 5th development, and it's scheduled to complete in Q2 2024. Just to touch on our past Affinity Living residences. So we have our first Affinity Living Riverside completed in January 2020. So it's located in a very prime location, rented well, and it's located right next to the 5-star Lowry Hotel. And Affinity Living Embankment West is open just recently, last year, July 2021. And it's located 2 minutes away from the shopping district, Harvey Nichols and Selfridges. Affinity Living Riverview is our fourth development. It's completed in October 2021 last year, and it's also renting very well.
Yes, exactly. And I always believe that when you looked into any property, if you want to invest, I will look at the track record, as in how well the previous property of the same branding is performing now, or how well even the developer has built or rented the properties. And Affinity Living Riverside, Riverview, Embankment West has been performing well, and taking into a case study for Affinity Living Riverside, which is on second year rental renewal now. It's 100% occupancy rate with high rebooking rates even on second year. Purely because with Affinity Living, we focus on the concept of it more to create a community within the development. So apart from amenities, like cinema rooms, 24/7 concierge, free coffee for tenants to hang out in the lobby. We also have events within the residential just to keep everyone as a community, so that ensures high rebooking rate. I think just to mention as well, being part of the branding, we as developer has very high vested interest to keep the branding up as well, to ensure high rebooking rates and success for our investor, so that we could have the 5th, the 6th, the 7th Affinity Living residences, same as what we've done for our Vita. And going back to Riverside, we are looking at an average of £1,250 in rental per month.
So when it comes to property investment, it's always about location, location, and location. And just to touch on the brand of Affinity Living, so this was created mainly to cater for the rental market, and the building is designed for Generation Y, so it has all the requirements that they're looking for, and so to ensure high rebooking rates. So for our Affinity Living Lancaster Wharf, it is located in the city center area. So if you can see my cursor here, which is here, and then it's about 5 to 7 minutes walk to the CBD area, the Snow, and also to the Snow Hill train station. On your further down is the Bull Ring Shopping District. That is about 10-15 minutes walk. And Curzon Street is where the HS2 coming into from London. It's about 1.2 kilometer away. And on the other side of our project site is the two universities, Ashton Universities and Birmingham City University. So taking on a different view of our project, this is where our building is located. Going down the Prinsip Street around here, so you will reach the Central Business District. It takes about 5 to 7 minute walk, and then that gets you to the Snow Hill train station as well. And this is where the Goldman Sachs and all the big fours are located. Just to share, with all the headquarters relocation, that this brings in a lot of population, and that is why our rental market is so active, and that results in higher rental yield as compared to our new UK national average, and that also increase our capital growth. Coming back to the location, this area here is the Bull Ring Shopping District, and then right next to it is the Curzon Street, the HS2, where HS2 is coming in. And then on your left here are the two universities, Ashton Universities and Birmingham City University.
Very strategic location indeed, yeah.
Okay. Just to share some of our project details. So Affinity Living Lancaster Wharf is located in Prinsip Street, Birmingham City Centre with the postcode B4. So we are the developer, Select Property Group. It's scheduled to complete by Q2 2024. There is a total of 23 story with a mix of 266 apartment, 1 and 2 bed apartment. So this is on a very rare 999 years leasehold. As typically in the UK, most apartments are on 250 years leasehold. It comes with large contemporary living spaces, gymnasium, rooftop terraces, garden courtyard, residence lounge, TV lounge, working lounge, and private working booth. It's about 5-7 minutes walk to the Birmingham Snow Hill train station and the Como Financial District. The estimated service charge is at £3 to £3.50 per square feet. Just to share with you, this is how the project would look like. This is how the project would look like. So the lowest stack would goes up to level 5 and with some amenities on the rooftop. The highest stack would go up to level 22. So there would be some apartments facing the canal and some facing the courtyard. On this picture here on your right, so this is looking towards the CBD area. At your 1 o'clock direction, this is a BT Telco Tower. It's a landmark in Birmingham. So Birmingham Snow Hill train station is somewhere here. And then further down is the Bull Ring Shopping District. Curzon Street would be somewhere around here. And not in the picture are the two universities, Ashton University and Birmingham City University. And also across the road here, there is a large Tesco. Just to show you some interior images of the property. So it's very well designed, bright open unit, and the property, they are handed over readily tenanted. So the kitchens and the bathroom, they are fully equipped. The kitchen come with microwave, oven, fridge freezer, cooking hob, extractor hood, and dishwasher. It doesn't come with the loose furniture, but should you wish to furnish your property, we do have furniture packages for you to choose from. So now these are some of the actual image of our completed Affinity Living residences in central Manchester. So this is our cinema lounge, which is very popular among the residents, especially on a Friday or Saturday night. This is the private working booth. This is the co-working space, and this is how the common area would look like. There are free coffee and sparkling water available at the beverage station. So as all our Affinity Living branded residences are streamlined, similar to Vita, so this is a very good reference of how the interior would look like. Here is a video tour of our Affinity Living Riverside in central Manchester, which is completed in January 2020. A good reference for how it would look like.
Yes, great. And I think looking at the amenities with Affinity Living, they will all look very similar to all Affinity Living branded residences. And I would say for investment, apart from location, it's always about how one drives rental into the development and how do you keep the rebooking rate high, also on how much interest is there in developer to maintain that as well, which would be a win-win situation. All layout are designed specifically for the best optimum rental yield. This will be a sample floor plan on the lower level. So you can see the blue ones are 2 bedrooms and the pink ones are 1 bedroom. Just as context, we've got our canal over here, and this would be a middle courtyard. So some units will be facing middle courtyard and the river. And we've got the main facade of the building facing the city. So units here will be facing the Prinsip Street and the city center. And over on this side, we've got units facing the university area, which is an open unblocked view as well. And taking into a 1 bedroom to zoom in on the layout, for example, this is looking at an entry level, level 2, unit 13, 213. This is a 1 bedroom at 491 square feet. listed price at £232,000, and down payment of 15% at just about £34,000. So that would equivalent to around about 58 to 59,000 Singapore dollars. Very functional layout, squarish unit. So as you walk into the entry, this would be your open kitchen, your open dining area, as well as your living space here. And you've got your bedroom with an ensuite as well. So kitchen and bathroom are fully fitted as well. Once you get the key, it is readily tenanted. And if you look at a 2-bedroom on a higher floor, this is on level 14, unit 07. This is at 673 square feet, listed price at £356,000 approximate, with down payment of 15% at just about £55,000. And if you look at the layout once again, as you enter into the unit, you've got your open kitchen, your dining area, your living space here. And this particular unit is great for investment because they've got 2 very similar size bedrooms. So great for friends co-renting or even couples as well. And this is a 2-bed, 2-bath unit. And more importantly, I think looking at costing numbers is always something that's important when you're looking at investments. I've had this slide. This is based on estimated rental yield as well as running costs involved based on the 1-bedroom. So we're basing on the entry level unit 213, estimated rental of $1,200 per month. And your running cost would be first the management fee. So this is for renting your property out. We have our preferred renting partners in place who has been renting for us well. The cost is at 10% plus VAT of your rental income when it's rented. So this will be one of your running costs. Ground rent was at 0.1% of your property price payable per annum. Starting from 1st July 2022, it is at peppercorn, so it will be 0 for you. And maintenance fee for the property, this will be for maintenance service charges of the property maintenance. So this is at between £3 to £3.50 per square feet per annum. I've based it on the highest side, £3.50 per square feet per annum for calculation. So we are looking at round about between 4.5 to 5% net yield for rental market in Birmingham. And on purchasing costs as well as a payment plans as well. So once you have decided to purchase a unit, you invest a £5,000 deposit and you go into the contract of exchange process. So that will be the signing of sales and purchase agreement with your appointed UK solicitor. This will take approximately 28 days to complete. And once this is done, your first installment of 15% is due, payable to your solicitor. And this is at approximately $34,000 based on this unit. Your next payment will only be in February 2023 next year, another 15% due. And your final payment, you'll invest the balance 70% minus the £5,000 deposit on completion in Q2 2024. Now, your additional purchasing cost will be your solicitor fee, which is approximately £2,000. And your stamp duty is payable on completion as well. So stamp duty in the UK are tiered by amount. So for Birmingham property price range, we are looking at around about 6 to 7% only for stamp duty. Right, and that's the end of the webinar today. And we've got some limited time offer for summer payment plan. We've got extended payment plans available for those who are interested. 5,000 deposit plus 495 admin fee on reservation. 15% first installment due on contract exchange. The second 15 is only due in February 2023. And balance 70% less 5K is due on property completion. The standard payment plans for 1 bed is 30% down payment and 70% on balance. So this is quite an extended payment plan for those who are keen. And for 2 bedrooms, we are looking at 15% on contract exchange and 10% due next year in February 2023. and your balance 75% less 5,000 deposit due on completion. And of course, as well, we do have our special webinar discount, which is at 3% discount for the first 5 reservations. For those who are interested or has been speaking with us on this development, please do get in touch if you're keen on units recommendation. And for those who are open to explore UK market or even for this development, please do get in touch with myself or Janet, and we can assist you from there.
Thank you.
Yep, and that's the end of today's webinar. Thank you for joining us. Have a good evening.
Thank you.